Johann Santer, Global Chief Operating Officer with Superfund, joins us live from Tokyo. Johann, everyone seems to be blaming China for the flash crash in gold. Do you think it's not China, this is simple profit booking and pure risk aversion which has caused this slide in bullion prices?
Yes, hello. I think it's a combination. You mentioned China already. It obviously has some influence, as we see, especially base metal prices suffering from it, but of course, in fact, also the precious metal markets. On the other side, we have seen profit booking. There have been clients in there, and the market has bought gold for 10 years already, and these people made triple-digit returns even. And for 2013, the theme seems also in other markets such as equity, so it's fairly easy to liquidate. And there are other opportunities out there, and of course, there were like margin calls that needed to be covered, and some people were just giving up on gold. But I think this is just temporary and probably a little bit overreacted at this moment.
Johann, hi, morning. Do you think the Cyprus gold selling also could have been a possible trigger because of the with regards to the crackdown that we're seeing?
Certainly. I mean, when there is like a market going down at the end, any kind of bad news is just triggering a further effect on it. On the other side, I believe central banks now for 2 years in a row entered into the net buyer territory, and we have seen they have been selling golds and dumping golds for over 2 decades until this trend finally ended about 2 years ago. So I don't think that this trend will stop right now, and probably there will be happy buyers from other central banks just picking up this gold from Cyprus.
Johann, do you think a bear market for gold has started, or this is a sharp correction within a bull market?
It definitely depends on the time frame you look at. I mean, just by definition point of view, yes, certainly that would mean a bear market, and even our underlying strategies where we're trend following managed futures fund, we're having short positions. On the other side, in the long run, we strongly believe in the appreciation of gold, just the fact that too much stimulus and reflationary methods have taken place in developed and emerging markets probably hint that gold will benefit from it. Of course, at this moment we are talking about deflation, but certainly commodities in the very long run will certainly benefit from this.
Johann, typically gold tends to do well when markets are, or when global growth is anemic. At a time when global growth is yet to pick up, why is there so much of risk aversion in gold, which was always considered as a safe haven?
Yeah, it's a good question. What we see right now is that, of course, it's theme-based also. Now we see like the theme clearly on the global equities and Asia, US globally. We have seen equity markets being a major theme, and gold is fairly easy to liquidate and can be shifted from this asset class also to more profitable short-term opportunities. And asset allocation is just far more dynamic as in compared to the long run. So probably you see a lot of profit booking just right now, but there's still a core holding in gold, and I don't think that prices will be pushed down too much further. Of course, for the next 1 to 2 trading days, we have to see. It needs to stabilize first, and from there probably there will be some pickup as well.
Johann, we've already, gone down a good 22.5% or so from the peak of the gold prices. Where do you see it stabilizing, though, in the near term?
I think that's the golden question in the gold market, and we will see probably in the next 1 to 2 days. And today, I think there's some positive signals already, as it has been stabilizing. But of course, it's too early to say that this is the bottom. Of course, it could go down a bit further. And, this is very difficult to forecast. So I probably cannot give you the exact timing and the figure on that.
But another 5%, 10%? What's the ballpark figure that you're estimating?
We try not to estimate because we have seen, nobody could have expected and estimated the last 2 days correction. To that extent, we always know that the last 2 years have been a very difficult environment for the gold market, and it has been consolidating and going sideways. And the number of reasons that we just briefly discussed at the beginning, globally, China, but also the margin calls, the profit-taking, Cyprus, led to an extended period of a hard sell-off for 2 days. So if it's 5 or 10%, it's very difficult to comment. Eventually, it's over already, but as mentioned, I think nobody can know at this moment.
Okay, fair point, Johan. Good chatting with you. Appreciate you taking the time out and chatting with us today on ET Now.